Okay. Yeah. Good evening, students. So, my name is Dweep Shah. Just before we start today's session on investment decision, let me give you a brief or a quick background about myself because this is the first time that we are meeting today. So, my name is Dweep Shah. I'm a qualified chartered accountant, and with the grace of God's blessing of parents and best wishes of you all, I secured an All India rank 44 in my CA final examinations. And the other part is like my score in advanced financial management. So at inter level, you have financial management, but at final level, you have advanced financial management. My score was 91 in that subject. So the only purpose of introducing about me is just to make you aware that your FM is definitely in good hands. And I have a rich experience in taxation. I have done job in corporates as well in finance field. So this is just a short background about me. So let's start with investment decisions. Are you all ready? Okay. Now, first, as you all know, that every financial manager has to take three decisions in their financial life. What are those three decisions? Can anyone tell me? What are the three decisions that every financial manager have to take in their financial life? Tell me. Have you learned this? The three decisions are investment decision, financing decision, and dividend decisions. Yes or no? Yes, investment, financing, and dividend. So, financial decision majorly covers the topic of capital structure decisions. It covers the topic of cost of capital. It covers the topic of capital structure theories. Whereas investment decision, the ultimate objective of investment decision is where to invest and how much to invest. You have to just find the answer of these two questions. Where to invest means where the company shall make investment and in which project company shall make investments. In which business line company shall make investment. In which product company shall make investment. This is the first question that financial manager has to answer under investment decision. Second question is once where to invest is decided. The second part is how much to invest. क्या 1 लाख इन्वेस्ट करना चाहिए वेदर फाइनेंशियल मैनेजर हैज टू इन्वेस्ट 1 करोड़ 5 करोड़ 100 करोड़ हाउ मच सो दैट इज द सेकंड आंसर that every financial manager has to find under investment decisions. Are you getting this? Where to invest and how much to invest. This is the basic principle of investment decision. Everyone following? Now under investment decision, broadly, we would be covering two topics. First is capital budgeting. And second is management of working capital. Management of working capital. So under investment decision, your syllabus has covered two topics. One is capital budgeting. Second is management of working capital. And you know, working capital is nothing but current assets less current liabilities. This you have already studied in your lower levels, right? It is nothing but current assets less current liabilities. So under management of working capital, we will further study how to analyze the different components of current assets and how to analyze the different components of current liabilities. By this, I mean that how should I manage my receivables, customers? How should I manage my inventory? How should I manage my debtors? How should I manage my cash? This all thing you will learn in the chapter of management of working capital. And how to manage your payables. This also you will learn in the chapter of management of working capital. Are you getting this? So investment decision. Investment decision gives answer to two questions. Where to invest? Like company shall make an investment under which project, under which business line, under which product, and how much to invest. कितना amount invest करना चाहिए? This is the answer that investment decision gives. In your syllabus, under investment decision, broadly there are two chapters. One is capital budgeting, second is management of working capital. And under management of working capital, we have sub parts, sub chapters, because working capital is nothing but current assets less current liabilities. So we need to learn each and every component of current assets, and we need to learn to manage each and every component of current liabilities. Are you getting this? Did you get the overview of investment decisions ki kya kya cover hoga? Any queries? Any doubts? Tell me. Any queries? Any doubts still here? Okay. Please, students, please communicate in class so that I am aware that you all are with me. Okay, since no response, okay, let's move ahead. So today, rather for next 3 sessions, we would be covering the chapter of capital budgeting. So for the next 3 sessions, we will learn about capital budgeting, investment decisions, capital budgeting. Okay? Are you getting this? So let's start. Now, before starting with any chapter, you need to understand the objective of that chapter. Ki why you have this chapter in your syllabus. How will this chapter help you in your financial life? Or whenever you become financial manager, how will you use this chapter practically? So it is very important to understand the objective of every chapter, not just for this subject, but I would advise you for all the subjects. Please understand the objective behind all the chapters. Okay? So what is the objective of this chapter? The ultimate objective of capital budgeting chapter is only one: to decide whether to invest in the project or not. Only one decision as a financial manager you need to take in this chapter. You have to decide whether the company shall invest in the project or not. बस इतना decision लेना है. Are you getting this? Are you following? Video stopped. Let me check. No, video is on. Video is on. Okay. So, Sailesh, it would be some technical issues on your side then. Okay. The capital budgeting chapter, the objective of this chapter is to decide whether to invest in the project or not. बस यही decision लेना है एक, whether to invest in the project or not. Now tell me, what do you mean by the term project? What do you mean by the term project? Hey, are we talking here about your school and college ka project? No, this is from business perspective. Project, the word project, the term project has a very broad meaning. Has a very broad meaning. Please understand. The term project may include investment in new business. So whether to start a new business or not, that decision is capital budgeting. Are you getting this? Project may include investment in new product or launching a new product. So whether the company should launch a new product or not, that is a capital budgeting decision. Are you following? Acha, not just business and product, but whether to buy a new machine, that is also a project. So whether the company should buy a new machine or not, that is also a capital budgeting decision. Acha, one more step ahead. Not just buying a machine, but even decision regarding replacing a machine. Are you following? Whether the company should replace the old machine with new machine or not, that decision is also capital budgeting decision. Are you getting this? Is everyone following? So the term project has a very broad meaning. So whether to invest in the business or start a new business or not, capital budgeting. Whether to launch a new product or not, that is again a project. So that decision again a capital budgeting project, capital budgeting decision. One step ahead, let me give you an example. So let's say currently you are into a manufacturing business. Okay? You are into a manufacturing business. So generally, every manufacturing business generates some amount of scrap. भंगार बोलते हैं ना, generate some amount of scrap. So currently, what business is doing? They have found some scrap dealer and they are selling that scrap to that scrap dealer on X amount. Just imagine, just visualize the example. Just visualize the example. I am into manufacturing business. My business is generating scrap. Currently, I am selling that scrap to the scrap dealer on X amount. Now, through market research, it is found that this scrap can be refurbished into a new product, into a completely new marketable product. So, if you want to convert this or refurbish this scrap into a new marketable product, then company has to invest in new machines. Are you getting this? Are you visualizing the example? So currently, company was selling it to the scrap dealer. All the scrap that was generated, they used to sell it to the scrap dealer. But now, through research, we found that this product can be easily refurbished. We need to just invest in some machines and we need to bring some labor and refurbish it and then sell it as a new product. So whether the company should stop the selling to scrap dealer and whether the company should go for refurbishing or not, that is also capital budgeting. This decision is also capital budgeting. Are you getting this? Whether the company should discontinue with the scrap dealer and refurbish the product or not, that is also capital budgeting decision. Are you following? So a project, the term project has a very broad meaning. So the ultimate objective of this chapter is to just make a simple decision whether to invest in the project or not, whether we should go for the project or not. Are you getting this clear till here? Any queries? Any concerns? Tell me. Any doubts? Can I move forward? Okay. So you understood the term project. Now, how to decide whether the company should invest or not? So let's say, again, let me give you an illustration. You all tell me, yeah? As a layman or as a businessman, you tell me whether I should go for a business or not. Okay? So let's say I want to start a new manufacturing business. So can I say again, this is a project. Starting a new business is a project. Let's say I want to start new manufacturing business of kids wear. Okay? So for that, I would need some amount of investment. Okay? So my outflow, let's say my investment amount is rupees 15 lakh. So I invested rupees 15 lakh in the business. Now, after investing, after starting the business, can I say some inflows, some cash inflows would be generating? I would be generating in my business. So let's say the inflows for year one. Let's say since it is a start, it is just 1 lakh rupees. Year two, I did some good business, 4 lakh. Year three, now my business life cycle is in a very growing stage. So let's say 7,50,000. Year 4. Now it is in the maturity stage. 6,50,000. And year 5. Slow down. 4 lakh. So let's say I have started a new manufacturing business for 5 years for the time being. My investment amount is rupees 15 lakh and my inflows for each year are as follows. And my total inflows comes to rupees कितना आ रहा है 4, 5, 12, 18, 19, 23 lakhs. Correct? My total inflows is 23 lakhs. Tell me, shall I invest in this business or not? Shall I start or shall I run this manufacturing business or not? Tell me, what is your opinion? My outflow 15 lakh, my total inflow 23 lakhs. Batao. Can I go for this manufacturing business? Shall I invest in this business? Everyone, share your opinion. Krishna says, yes, sir. Obviously, sir. Rihanna also says, obviously, sir. Your inflow is 23 lakh and your outflow is 15 lakh. So you are having a profit of 8 lakh. But only 2 students have their opinions. Rest all. Sir, it is your business. It is your lookout. करना है तो करो. नहीं करना है मत करो. Silesh also says, sir, you should go for this manufacturing business. So what you did, how did you make this decision? So you just compared outflow with inflow, yes or no? What you did? You subtracted outflow from inflows. Yes or no? So my inflow was 23 and my outflow was 15. Since my net cash flow is in positive, you all decided, sir, you should go for the business. Yes or no? But had this been so simple, it would not be at CA intermediate level. It would be at 11th class. अगर ये इतना simple होता, you have to just compare the inflow and outflow. Had this been a very simple task, even the 8th grade or 10th grade student can solve this. So what you did, you compared the inflow and outflow, but in absolute terms. You compared the inflow and outflow in absolute terms. But capital budgeting says, the capital budgeting chapter says, you have to compare inflow and outflow, but in real terms. This is the difference. Capital budgeting chapter says, compare inflow and outflow. You are correct, but not in absolute terms. You have to compare inflow and outflow in real terms and then decide whether to invest in project or not. Not in absolute terms, but in real terms. Not in absolute terms, but in real terms. Now everyone is having some question in the mind. Sir, what do you mean by real term? Yes or no? This is the question that is evolving in your mind. Yes or no? I will explain that. But did you get my point? You have to not just simply compare inflow and outflow in absolute terms. This is the absolute numbers. Capital budgeting says no comparison in absolute terms. If you want to decide, then compare inflow and outflow in real terms. Now the question arises, sir, what do you mean by real terms? So real term means, comparison in real term means comparing inflow and outflow. That is correct. Comparing inflow with outflow. But you have to compare present value of inflow with present value of outflow. This is the only difference. Are you following? Are you getting, friends? You have to compare present value of inflow with present value of outflow. The logic is very simple. The logic is very simple. Can I say this outflow of 15 lakh? I have to invest today because I want to start the business today at this point. And this inflows, this 1 lakh of inflow is at the end of year one. So can I say this 1 lakh will have some less value today at this point? Yes or no? Time value of money. Recall the time value of money ka concept. This 4 lakh I would be receiving at the end of year two. But उसकी आज की value क्या? Obviously, it would be less than 4 lakh. It would be at some discounted value. Are you following? The present value of 4 lakh would always be less than 4 lakh. Are you following? Because all the comparison, all the calculations we are making today, we want to decide today. So all the future calculations we have to bring at today's point. Is everyone following this? So comparison of inflow and outflow in absolute terms is not what financial manager will do. Some normal accountant can do that comparison and decide. But as a financial manager, as a professional, your comparison of inflow and outflow should be in real terms. And what do you mean by real terms? Comparing the present value of inflow with present value of outflow. Are you following? You have to compare inflow and outflow. That is correct. But present value. Is everyone following till here? Any questions? Any doubts? So now the next step is to learn how to calculate present value. Yes or no? So ये तो समझ में आ गया. हाँ, someone has raised hand. Yes, tell me your doubt. Someone had raised hands. Ask your doubt, please. Okay, let's move forward then. So, uh, no doubt. Okay. So, this is very clear now that we have to compare inflow and outflow in real terms. And what is real terms? It is just comparing the present value. Please put weightage on the word present value. You have to compare present value of inflow with present value of outflow. This is also clear. Now let's learn how to calculate present value. Simple. And this you have already learned at CA foundation level. You had the chapter of time value of money in your quant subject. Yes or no? So that same concept you have to apply here. Black color, I'm not able to select. ठीक है? How to calculate present value? Have you seen this formula? Sorry. Future value is equal to present value 1 plus r raised to n. Have you seen this formula? This is concept of time value of money. So can I say to calculate present value, my formula would look something like this. Future value 1 plus r raised to n. And this is nothing but called discounting of future value. Discounting of future value. This formula is called as discounting of future value because let's say 5 lakh rupees you are getting at the end of 3 years. So that 5 lakh will not be worth 5 lakh today. The 5 lakh at the end of 3 years would not be worth 5 lakh today. It would be at some discounted value. Are you getting this? So just transposing the formula. Present value is nothing but future value 1 plus r raised to n. Okay? Now continuing with the same example. Let's say my R is 12%. Let's say my R is 12%. So can I say now I can calculate the present value of all these inflows? Yes or no? This 1 lakh is future value of year 1. This 4 lakh is future value at the end of year 2. This 750 is future value at the end of year 3. So I have to discount these future values to bring at today's point. Yes or no? To bring or to calculate the present value. Yes or no? So let's discount. So when I say this would be 1 lakh divided by 1.12 raised to 1. N is number of years. R is rate of interest. ठीक है? Plus for year 2 it would be 4 lakh divided by 1.12 raised to 2. Because 4 lakh you would be receiving at the end of year 2. So that's why it is raised to 2. Then the cash inflow in the end of year 3 is 750 divided by 1.12 raised to 3. Then 650 divided by 1.12 raised to 4. And last but not the least, 4 lakh divided by 1.12 raised to 5. Can I say now summation of all these future values or all these present values will be my total present value of cash inflow? Yes or no? Summation of all the discounted values will be my total present value of cash inflows. And you know this, now how to solve or how to calculate this on calculator? You know the way, right? Or you don't know? I is equal to 14.21. You don't know how to calculate. You have not learned this at lower level. Okay, so take 1 lakh on calculator. So let's start for year 1. Take 1 lakh on calculator, divide 1.12 and press equal to 1 time. क्या है आंसर? No. See, some of you know and some of you don't know. So I have to explain how to solve this on calci. ठीक है? So let's just learn how to calculate cash inflow for year 1. So take 1 lakh on calci. लिया? Divide by 1.12, press equal to 1 time. कितना आया? What is your answer? 89. Okay, everyone is getting 89,285. So let's round it off. 89,286. ठीक है? Now for year 2, take 4 lakh on calci, divide by 1.12 and press equal to 2 times because it is raised to 2, na? So you have to press equal to 2 times. So 4 lakh divided by 1.12 equal to. कितना आया? 318,878. Okay. So 318,878. For year 3, 7,50,000 divided by 1.12, press equal to now 3 times because it is raised to 3. So 750 divided by 1.12 equal to 533,835. 533,835. Likewise for year 4 and for year 5. So for year 4, you will be pressing equal to 4 times. And for year 5, you will be pressing equal to 5 times. So for year 4, how much it is? So 6,50,000 divided by 1.12 equal to 413,087. 413,087. And for year 5, it comes to 4 lakh divided by 1.12, press equal to 5 times. 226,971. 226. 971. So can I say my total present value of inflows is equal to कितना आ रहा है? Please add all this. I am not having calci with me, so I will rely on your calculations. 89,286 plus 318,878. 15,82,056. 15,82,056. And my present value of outflow. Hey, tell me, do I need to discount my outflow? Do I need to discount my investment? No. Why? Because in absence of information, it is always assumed that outflow would incur today only. Your investment would be incurred today only. This is what you have to assume in absence of other information. Are you getting this? So can I say my outflow is nothing but 15 lakh? Because that outflow I am incurring, I am spending today only. So I don't need to discount that. Is everyone following? So can I say my net present value? My net present value. My net present value comes to 82,056 and that too positive, not negative. Are you getting this? And now capital budgeting says that you decide you should go for project or not. Tell me, shall we invest in the project or not? Now tell me. Bolo, what is your opinion? Now we have compared in real terms. We compared the inflow with outflow in real terms, not in absolute terms. So yes, now you can decide. So since net present value is positive, you can go for manufacturing business. Are you getting this? So यहाँ पे हमें 8 लाख नहीं देखना था. The real terms, the real benefit from this project is just 82,000. Are you getting this? And not 8 lakhs. I hope this is clear to you. Okay? So this is how you make decision under capital budgeting technique or under capital budgeting chapter. Okay? So this is one of the way of deciding whether you should go for the project or not. This is one of the way. Please put weightage on my words. There are other 6 techniques as well, which will help you in deciding whether the company should go for the project or not. This is one of the way, which is called as net present value technique. And this is highly used technique or highly used method or highly used way. Is everyone following? There are other 6 techniques as well. We will learn once we move ahead with this chapter. But this is one of the way and highly used technique, highly used method in deciding or in evaluating any projects. Are you following, friends? Any queries still here? Bolo. This chapter is considered as one of the toughest in financial management syllabus. Huh? But you will find it very easy. You just focus on what I teach and you just focus on all the concepts. Bolo, any queries still here? Shall I move ahead? Any doubts, any concerns? So till now we have learned that capital budgeting chapter involves only one decision, or it has only one ultimate objective, that is to decide whether to invest in the project or not. And project has a very broad meaning. Now, how to decide whether to invest in the project or not? Compare the inflows and outflows, but not in absolute terms. You have to compare inflows and outflows in real terms. Now, what do you mean by real terms? Real terms means comparing the inflow and outflow in present value or comparing the present value of inflow with present value of outflow. Now, how to calculate present value? Use the concept of time value of money. Simple. यहाँ तक इतना सीखा हमने. ठीक है? Now, the next part. In the current illustration, I directly gave you the amount of inflows. Are you following? I directly gave you the amount of cash inflows. Okay? And again, I am repeating. I am repeating. Please, this is very important. This chapter focuses or gives weightage to cash inflows, to cash inflows and not on profit. Financial management is more about cash inflows, cash outflows rather than net profit, net loss. हमें अकाउंट से लेना देना नहीं है. We are concerned more with money. Are you following? FM is all about money, paisa. So entire syllabus is more concerned about inflows and outflows rather than just profit. Okay? So now how to calculate cash inflows? That is a task that we need to learn. How to calculate cash inflows? In the above example, I already gave you the amount directly. But in few questions, you are required to solve the amount of inflows as well. ये जो inflows था ना, ये 1 lakh. How did this 1 lakh came? Or how to calculate this 1 lakh? How to find this 4 lakh? ये 4 lakh कैसे आया? That we will learn now. Good evening. So how to calculate cash inflows? Please give significance to this word, cash inflows. Don't compare it with profit. They both are different. And FM is all concerned about money, inflows, paisa. Okay? How to calculate? FM, since I guess you have learned many chapters in FM, or I guess you have started with some chapters in FM. So FM is all about formats and formulas. Every chapter, there would be certain formulas, there would be certain formats. And those formats and formulas are very easy to remember. You don't have to rectify that. You don't have to memorize that. It is very logically understood. Okay? And it is very easy to remember. So this chapter also has a format of cash inflows. Ideally, cash inflows is nothing but earnings. Okay? So it will start with sales. My cash inflow ka format, I will start with sales. Because inflows is nothing but indirectly, directly related to earnings. Okay? So I will start with sales. I will subtract variable cost. Yes or no? The resultant figure is called as contribution. This you have learned in cost management chapter, cost management paper. From contribution, I will subtract fixed cost, but excluding depreciation. Excluding depreciation. So the resultant figure or the resultant amount is called as operating profit. Operating profit or net profit before depreciation and tax, NPBDT. Okay? So the format starts with sales because cash inflows is directly or indirectly connected with earnings and income. So I will start with sales. Usme se variable cost I have subtracted. The resultant amount is called contribution. Then I will subtract fixed cost but excluding depreciation. ऐसा क्यों किया? You will understand once we move ahead in some time. ठीक है? So I will subtract fixed cost excluding depreciation. The resultant figure is called as net profit before depreciation and tax or operating profit before depreciation and tax. Okay? Because I have not deducted depreciation yet. So that's why it is called as net profit before depreciation and tax. From that, I will subtract depreciation because I want to show depreciation separately. So the resultant figure is called as net profit before tax. This was net profit before depreciation and tax. उसमें से I deducted depreciation. So the resultant figure is called as net profit before tax. Simple. Are you following? इसमें से I will subtract tax. So the resultant figure is called as net profit after tax. Is simple or not? And now I will add the depreciation, and the resultant figure is my cash inflows. Sir, we didn't get this. पहले you subtracted depreciation. Then you added back depreciation. So what's the logic to subtract and then add back? We didn't get this, sir. Can anyone tell me why did I subtracted depreciation earlier and then added back the depreciation? Anyone wants to try? Think logically. Sir, depreciation लेना ही नहीं था, add ही करना था. You wanted to add back. Then why did you subtract only? ले ही लेना था ना, ignore करना था. So why did you first subtracted and then added back? Cash. Ha, so Jayendra, that is right. I mentioned about cash. So why did I subtracted depreciation first and then added back? I should have completely ignored that, na? Rihanna said to find NPBT and NPAT. Yes, correct. She is correct. Tax benefit. Silesh is perfectly correct. A depreciation is a non-cash expense. So it does not have any weightage in cash inflows. That is correct. Silesh is absolutely correct. Depreciation has tax benefit. Why? See, depreciation by nature is a non-cash expense. You all agree with this? Because there is no cash outflow inflow in depreciation. You all agree this? So ideally, there is no weight in depreciation in capital budgeting. Ideally, there is no weight under cash inflows. Are you getting this? But can I say depreciation P&L का एक expense है? It is debited under P&L. So can I say depreciation, if it is an expense, it will save some taxes for me. Let's say there is company A with depreciation of 100, income is 1000. So can I say my net profit here would be 900, and let's say my tax is 30%. So can I say my tax comes to 270 for A Limited? Now let's say there is B Limited, which exactly has same revenue, 1000, but it does not have depreciation. So can I say its income is 1000 only and tax 30%, 300 rupees. So company B has to pay more tax than company A. Why? Because it does not have depreciation as an expense in its P&L debit side. So can I say depreciation is there? So it saved my 30 rupees. Yes or no? Because of depreciation, there is some tax savings. Is everyone following? Are you getting this? Logically, company A has depreciation in its P&L debit side. So that's why it is able to save 30 rupees of tax. Are you getting this? So depreciation by itself is not a cash inflow outflow. It is non-cash expense. But tax savings on depreciation, or to calculate the right amount of depreciation, I need to deduct depreciation, yes or no? To calculate the right amount of tax, to calculate the correct amount of tax, I need to first deduct the depreciation, yes or no? So that's why deducted depreciation, just to calculate this tax correctly. And then once my tax calculation is done, I added back the depreciation to remove its effect. Okay? Are you following? So by nature, depreciation has no relevance under capital budgeting. But to calculate the correct amount of tax, we need to first deduct depreciation and then add back the depreciation. Are you following? Because depreciation will save some taxes for you. Bolo, any doubts? Any concerns? Any query? So this amount is my cash inflow. Likewise, for year 2, for year 3, for year 4. Okay? Are you getting this? Likewise, for all the years, we will calculate cash inflows. And then we will discount to bring it to the present value. Are you following? Any queries in format of calculating? Why are we not deducting interest, sir? Yes, good question. Good question. Hey, anywhere I didn't deduct interest. Generally, you used to deduct interest, EBIT less interest, then EBT less tax, EAT less preference dividend. This format you used to prepare? Yes or no? But here in capital budgeting, I have not deducted interest. And some student or one student had rightly raised this. So that was my next topic that I was going to cover. But before that, did you understand cash inflow? How to calculate cash inflow? I will come to that point. Why I have not deducted interest. But apart from that, did you understand this format? Right from sales till cash inflows. Bolo, any queries? Because if this is clear, then I can move ahead. This is base of capital budgeting. How to calculate cash inflow is a base. No, here it is not EBIT. Here it is net profit before depreciation and tax. The reason is because here we don't subtract interest. That's why it is not EBIT. In capital budgeting, we don't subtract interest. That's why it is not EBIT. It is called as operating profit before depreciation and tax. And why we are not subtracting? No, this is not EBITDA also, because we are not subtracting interest only. We are not subtracting interest only. So at one stance, you can say it is EBITDA. Yes, it is EBITDA. But interest has no relevance in this chapter. Like not in this chapter, but in this format, interest has no relevance. I will explain you why. So this is, yes, correct. Silesh said correct that it is EBITDA. But EBITDA, generally after EBITDA, we subtract interest. But here in this chapter, we won't be subtracting. The logic is now what I will explain to you. So first step in capital budgeting, step 1 is to learn how to calculate cash inflows. Now the second step, again in my example, in my illustration, I directly gave you the rate of interest which was 12%. But how to calculate this 12%? That is the next topic that we will learn. And in this, your doubt will get clear. In my previous illustration or in my first illustration, the basic illustration, I directly gave you the amount of cash flows and rate of interest. But how to calculate cash inflows, we just learned. And what if rate of interest is not given? How to calculate that? We will learn now. Okay? So ideally, the discounting rate, this rate of interest is nothing but discounting rate. So what should be your discounting rate for a project? Think, as a financial manager, what should be your discounting rate for a project? So the discounting rate, ideally, practically, should be your expected rate of return from that project. Should be your expected rate of return from that project. Hindi bhi boliye. I will try to speak some words in Hindi, but Institute has a guideline that entire session needs to be conducted in English. So I need to follow that protocol as well. Okay, but I will try to use some words in Hindi as well. But since it is Institute's protocol, I need to follow that. So the discounting rate, the 12%, ये 12% जो हमने illustration में लिया था, that was nothing but discounting rate. So discounting rate practically, how would have that come? So discounting rate is nothing but your expected rate of return from the projects. So let's say my expected rate of return, or I want at least 15% from my manufacturing business, then your discounting rate would be 15%. Are you getting this? This is how in practical life you decide on the discounting rate. Let's say you all want 18% from that project, then your discounting rate, your R would be 18%. Are you following? So it is very subjective. Let's say someone just wants 10% from that project. So 10% would be their discounting rate. Are you following? So it may depend on person to person, company to company. Are you getting this? So this is the first thing. But since we are learning this from academics point of view, we need to be at a uniform rate. We need to bring a uniform rate for all the students. कल उठ के मैं बोलूं मुझे 15% चाहिए, यू से यू वांट 20%, सो दोनों का आंसर अलग हो जाएगा. सो वी हैव टू ब्रिंग सम यूनिफॉर्मिटी. सो इन दैट केस डिस्काउंटिंग रेट कैन ऑल्सो बी योर इंडस्ट्री का स्टैंडर्ड रेट. इंडस्ट्री का स्टैंडर्ड रेट ऑफ रिटर्न. सो आई स्टार्टेड मैन्युफैक्चरिंग ऑफ किड्स अपैरल. So in that industry, what is the general rate of return across that kids wear ka industry? That would be my discounting rate. Are you following? So your discounting rate ideally should be your expected rate of return from the project. That is what you want from the project. How much return you want from the project. That is your discounting rate. But if not that, then at least the industry standard rate of return. So let's say in the industry of kids wear manufacturing, the standard rate or the average rate of return is 15%. Then I will use that rate. Are you following this? Any questions still here? See, this all things are very logical. Huh? FM is very logical, very practical. First, go for your expected rate of return. How much you want from the project? Go for that. Discount with using that rate. If that is not given in the question, then see whether industry standard rate of return is given or not. If that is not given, then last but not the least, use weighted average cost of capital. Cost of capital. Are you following this? If expected rate of return or industry standard rate of return is not given, then you would want now that at least your cost of capital gets covered. At least उतना तो कवर हो जितना मेरा कॉस्ट है. So use that rate. Are you following? Hey, is this chapter done? Cost of capital done? Have you learned this chapter? Done, na? So you know what is weighted average cost of capital and overall cost of capital. Yes? Are you getting this? So discounting rates, you have three choices. Again, I am repeating. Discounting rate, you have three choices. First, find out for your expected rate of return. How much return you want from the project. Use that rate as a discounting rate. If that is not available, then find out for industry standard rate. That in that industry, what is the general or average rate of return across the industry. Use that rate as discounting rate. And if that is also not available, then at least you would want that at least my cost of capital gets covered. If my cost of capital is not getting covered from the project, then there is no purpose of going for that project. You have to outrightly reject the project. Are you getting this? So a discounting rate in absence of information or from academics point of view will always be WACC. Because in your practical questions, ICAI has always used this rate. They have given no information for expected rate and standard industry standard rate. Are you following? So in all the questions, they would give you WACC, overall cost of capital. And that rate you have to use as a discounting rate. Everyone understood? Is everyone getting this? Clear? So first was how to calculate cash inflows. Second, how to select a discounting rate or what actually should be your discounting rate. So when I say discounting rate is nothing but expected rate or the industry standard rate, or if that is also not available, then your cost of capital. And now, how do you calculate cost, weighted average cost of capital? Can I say it is nothing but weight of debt multiplied by cost of debt plus weight of preference multiplied by cost of preference plus weight of equity multiplied by cost of equity and plus weight of reserves multiplied by cost of reserves. Yes or no? So when I say this cost of debt, this KD includes your interest. Yes or no? Interest cost is already included in cost of capital in your discounting rate. Are you following? So that's why we don't subtract it from this statement. Someone had this question ना कि sir interest क्यों subtract नहीं किया? Because interest is already included in WACC. Interest cost already is a part of your cost of capital. So that's why we don't subtract interest from this statement. Because if we subtract from this statement and format, then interest would have been considered twice. One in your weighted average cost of capital and one in this format. So that is wrong. Are you getting this? So that's the reason we didn't subtract interest. We neither subtracted preference dividend. We neither subtracted equity dividend. Although they are cash outflows. Although they are cash flows, still we didn't separate. Why? Because they are already a part of your cost of capital. Is everyone following? That is, they are already a part of your discounting rate. So you cannot deduct it twice. Clear? Clear, everyone? So, one more time. Okay. So Rihanna had this question that, sir, why didn't you deduct interest from the format above? The reason is very simple because interest, see, can I say this WACC is nothing but my discounting rate. Okay. Now let's say we will use WACC for all the questions as a discounting rate. Okay. My discounting rate would be WACC only. So WACC, how do you calculate WACC? It is nothing but weight of debt multiplied by cost of debt plus weight of preference multiplied by cost of preference plus weight of equity multiplied by cost of equity plus weight of reserves multiplied by cost of reserves. And can I say this cost of debt is nothing but your interest cost. So our interest expense has already been a part of WACC. That is, it has already been a part of your discounting rate. वो आ गया डिस्काउंटिंग रेट में इंटरेस्ट की इफेक्ट डिस्काउंटिंग रेट WACC में आ गया है. That's why we don't subtract it specifically or specially in that format because already it is a part of WACC and WACC is nothing but your discounting rate. So interest, preference dividend, equity dividend is already covered in your discounting rate, the rate at which you will discount your project or your future cash flows. So that's why to avoid duplicacy of interest, preference dividend and equity dividend, we don't consider these costs in that format because it is already a part of your discounting rate. वो cost आ गया है discounting rate में. Now let's move ahead. So under capital budgeting chapter, under investment decision, there are seven different ways to decide whether to invest in the project or not. There are 7 different techniques to decide that will help you in deciding whether to invest in the project or not. And those techniques are called as capital budgeting techniques. Capital budgeting techniques. These techniques are nothing but methods or way to decide whether to invest in the project or not. The name of those 7 techniques are: first is payback period, short form of a payback period is PBP. Second, we have discounted payback period. The short form of it is DPBP. Third, we have accounting rate of return, or it is also called as average rate of return. Accounting rate of return or average rate of return. Short form of this technique is ARR. Fourth, we have net present value technique. Net present value technique. The technique that we used in our illustration, NPV. The short form of this technique is NPV. And this is highly used technique in practical life, in practical financial world. Okay? In all the corporates. So it is very important. Huh? Sixth, we have profitability index. Profitability index technique. And the short form of this technique is PI index or P index, PI. Profitability index का दूसरा नाम is desirability factor. So sometimes question will say calculate desirability factor. Sometimes question will say calculate profitability index. It is one and the same. Sixth is internal rate of return. Internal rate of return. Short form of this technique is IRR. The reason of mentioning the short form is very simple, because from now onwards, I will just use short terminologies. I will not write entire internal rate of return. I will just write IRR. I will just write NPV. I will just write PBP. Okay? So you must be familiar with this short terminologies. And last but not the least is modified version of internal rate of return. Modified internal rate of return. Which is called as MIRR. Okay? So these are 7 different techniques, or rather I would say 7 different ways in deciding whether to invest in the project or not. It depends on you, or it depends on corporate to corporate which technique they want to follow. But highest weightage is given to NPV technique, because this is more practical and logical than all the techniques. Okay? Are you following? So please just take a screenshot of these 7 techniques and just remember the short forms, because henceforth we will be using short terminologies. We will not write entire payback period. We will just write PBP. Done? Can I proceed? So our next step or next learning outcome is to learn these 7 techniques. Our next target is to learn these 7 techniques. Can I proceed now? So number 1, let's start with payback period. PBP. Okay? Payback period. Now listen very carefully. Yeah? Payback period is the time taken to recover my original investment. मतलब कि let's say my investment in my illustration was 15 lakh, right? So within how many years or how much years it took to recover 15 lakhs back? Are you getting this? मुझे वो 15 लाख मैंने जो इन्वेस्ट किया था कितने साल में वापस मिल गया? That is payback period. Time taken to recoup your original investment or to recover your original investment. That is payback period. Time taken in years to recover original investment amount. So in our illustration, it was 15 lakh. My original investment or my original outflow was 15 lakh. So within how many years or how much years it took for my business to recover back that 15 lakh? That is payback period. So when I say payback period, will always give your answer in years, not in any amount, not in rupees. Are you getting this? It will always be in years. बोलो मीनिंग समझा एनी डाउट इन मीनिंग वी विल take a technique, we will understand the meaning, and I will give you some illustration so that everything is very clear. We will take some numbers, we will take some illustration, and then complete the technique. बोलो मीनिंग में कोई डाउट? ओरिजिनल इन्वेस्टमेंट मेरा कितने साल में रिकवर हो जाएगा, दैट इज पे बैक पीरियड. ठीक है. So let's take an illustration. My original investment is, let's say, 20 lakhs. So my investment, my outflow, sorry, in the business is 20 lakhs. Now my inflow per annum is rupees 5 lakhs. Is rupees 5 lakhs. So every year my inflow would be 5 lakh, 5 lakh, 5 lakh, 5 lakh, 5 lakh. Tell me what would be my payback period? मेरा ओरिजिनल इन्वेस्टमेंट कितने साल में रिकवर हो जाएगा? Tell me what would be my payback period in this case? I've invested 20 lakhs and I'm earning inflow of 5 lakh every year. So my original investment would get recovered within how many years? 4 years. Everyone, 4 years. Yes, 4 years. Correct. So that is your payback period. Simple. So how did you find this 4 years as your answer? You divided 20 lakhs with 5. Yes or no? Yes or no? This is the calculation your brain did. So the formula of payback period is nothing but original investment divided by inflows per annum. This is the formula. I told you FM is all about formulas and formats, but the formulas are very logical. You don't need to rectify that. So बातों बातों में हमने पेबैक पीरियड की फॉर्मूला सीख ली. The formula of payback period is original investment divided by inflows per annum. Correct? Understood? Any queries till here? Bolo. Any doubts? Any concerns? But now my next question. See, in this illustration, inflows were constant every year. What if the inflows were not constant? What if inflows were uneven? So let's learn how to calculate when inflows are uneven. Payback period when inflows are not constant every year. That is when inflows are uneven every year. ठीक है? So my original investment, let's say it is 10 lakhs. Now my pattern of inflows is as follows. Year 1, 2 lakh 50. Year 2, 3 lakh. Year 3, 480. Year 4, I'm taking random numbers. 5 lakh. Year 5, 20 lakhs, and year 6, 25 lakhs. So these are my stream of cash inflows or my pattern of cash inflows. Now, since the inflows per annum are not constant, I cannot use that formula. I cannot use this formula, original investment divided by inflows per annum. This formula can only be used when your inflows per annum are constant. But if they are not constant, you cannot apply this formula. You will get wrong answer. So how to find payback period? Tell me. Bolo. This is my question to you. Your investment is 10 lakh. Now think from businessman point of view. You forget that you are a student of FM. Think from business perspective. You invested 10 lakh and you are generating 2 lakh 15 year 1, 3 lakh in year 2, 480 in year 3, 5 lakh in year 4, 20 in year 5 and 25 lakh in year 6. So what would be your payback period? ये 10 लाख कितने साल में रिकवर होगा? Tell me. Tell me. Tell me. Tell me. Tell me. 5. Average of inflow. Sir, average of inflow करो. Someone said 5. Hey, year 5 में तो देखो. Year 1 में 250. Then year 2 में 3 lakh more. So till the end of year 2, I'm able to generate 5 lakh 50 plus 480. Till the end of year 3, 550 plus 480 means it is more than 10 lakh. You are able to recover more than 10 lakh. 5 कैसे आया? 3. But till the end of year 3, I'm able to recover more than 10 lakh. I just want to recover 10 lakh, exact 10 lakh. Till the end of year 3, I'm able to recover 10 lakh 30,000, not 10 lakh. I want exact answer. बोलो कैसे करोगे? Average. Someone said average. Sir, do average. Simple. Krishna 2 years 11 months. Oh, very specific. Anyone? Other? 2 years 11 months may or may not be correct. I don't know. I have not calculated yet, but it might be correct. It may not be correct. But average is wrong. Year 3 is also wrong because till the end of year 3, you are able to recover 10 lakh 30,000, not 10 lakh. You are able to recover more than 10 lakhs. So that is also wrong. Now let's learn how to calculate. So, very simple. Prepare 3 columns. First column for year 2, 3, 4, 5, 6. Okay? Second column, again very simple. Write down the amount of cash inflows. 2 lakh 50, 3 lakh, 4 lakh 80, 5 lakh, 20 lakhs, 25 lakhs. ठीक है? Third and very important column, prepare table of cumulative cash flows. Prepare table of or column of cumulative cash flows because this will give you a very quick insight that between which year my original investment is getting recovered. That's why we prepare this column. So let's prepare. So till the end of year 1, can I say I'm able to recover 2,50,000? 3 is wrong, Silesh. 3 is wrong. Till the end of year 1, I'm able to recover 250. Till the end of year 2, I'm able to recover 5,50,000. Yes or no? 5,50,000. Correct? Sir, कैसे 550? Simple. You are preparing or you are doing cumulation. 250 plus 3 lakh. So till the end of year 2, my business is able to generate inflow of cumulative inflow of 5,50,000. Till the end of year 3, again 550 plus 480. कितना आएगा? Can I say 1030? So till the end of year 3, my company, my business recovered 10,30,000. Likewise, till the end of year 4, 15 lakh 30 till the end of year 5, 35 lakh 30, 55, 60 lakh 30. Everyone understood till this step? Bolo, any doubts? I've just prepared a column for cumulative cash inflows so that I can get a quick insight that my original investment is getting recovered between which 2 years. Bolo, any doubts still here? Till now, I have not calculated, I have not found the answer, huh? But I am on my way to find the answer. Bolo, any doubt? Any query still here? Please respond. Huh? Okay, no doubt still here. But by this step, is this very clear that my 10 lakh would recover or would get recovered somewhere between year 2 and year 3? Yes or no? My 10 lakh would get recovered somewhere between year 2 and year 3. That is for sure. Yes or no? This is also very clear. So can I say my payback period is 2 plus something? It is getting recovered between year 2 and year 3. That is for sure. That I can see from this cumulative column, cumulative cash inflow ka column. Correct? So it is 2 plus something. That is for sure. Okay? Now, between year 2 and year 3. Okay? So in this entire 1 year period, how much cash inflow my company generated? Tell me, how much cash inflow my company generated between year 2 and year 3? कंपनी ने कितना कमाया पूरे एक साल में? So in entire 1 year period, rather not between year 2 and year 3, I would write this as in entire 1 year period of year 2 and year 3, between year 2 and 3, my company earned 4,80,000 or my company recovered 4,80,000. Yes or no? See, between year 2 and year 3, company recovered 4,80,000. Correct? But I just want to recover 4,50,000. Yes or no? I don't want to recover entire 4,80,000. I just want to recover 4,50,000. Are you following? The difference between 10 lakh and 5,50,000. I just want to recover amount of 4,50,000 between year 2 and year 3. My company has recovered 4,80,000. My company has recovered 4,80,000 between year 2 and year 3. That is for sure. But I just want to recover 4,50,000. So how much time it will take? First, you have to just cross multiply. So 4,50,000 into 1 divided by 4,80,000. Interpolation. This is called as interpolation technique. Just cross multiply. कितना है आंसर? बोलो. 0.9375. 0.94. So I would say 0.94 years. So can I say my answer is 2 plus 0.94? 2.94 years. Are you getting this? This is how you calculate payback period when cash inflows per annum are not constant. So the steps are: first, prepare a column for cumulative cash flow. Then decide that your original investment is getting recovered between which 2 years. So in our present example, our original investment of 10 lakh was falling between year 2 and 3. So now it is very sure that payback period is 2 plus something. That is very sure now. So 2 plus something. Now how to calculate that something? So we used cross multiplication or interpolation method. And again, I am repeating how to calculate or how to use this interpolation method. So what I did, I first calculate that in the entire 1 year period between year 2 and year 3, can I say my company earned 4,80,000, or in other words, my company recovered 4,80,000 rupees? But I just want, or my company just wants to recover 4,50,000 to reach at the point of original investment. Company does not require to recover 4,80,000. It is sufficient for the company if it recovers 4,50,000. Are you getting this? 450 kaise aaya? It is nothing but 10 lakh of your original investment minus this 5,50,000. Correct? And then I did cross multiplication. So in the entire 1 year period, company recovered 4,80,000. So to recover 4,50,000, how much years would be needed? This is simple interpolation or cross multiplication. So it will take 4.94 years to recover 4,50,000. So my answer is not 3 years, it is 2.94 years, something less than 3. Following? So this cross multiplication is also called as interpolation. Well, any query? It is very logical. Yes, Neeraj correct, Almas correct. Then someone else also said 2.9. Yeah, Neeraj only said. You all are very fast, huh? You all are very fast. Good. So this technique has certain disadvantages. This technique has certain advantages and disadvantages. But before moving to advantages and disadvantages, tell me, did you understand payback period? What is the meaning of payback period and how to calculate payback period? Bolo, any doubts in that? If no doubts, then we can move forward. Any queries? PBP? No doubt. Okay, clear. Okay, so let's move to advantages and disadvantages. और यार कौन सा कलर? Advantages of payback period. It is only There is only one advantage. It is very simple to calculate, and it gives you quick insight that within how many years I'm able to recover my original investment. So tell me, lower the payback period is better for the business or higher the better? And it gives you quick insights for the time within which your investment is getting recovered. Bolo, payback period lower the better or higher the better? Lower, obviously lower. I would want my investment to get recovered quickly, ना? जितना बिजनेस में डाला है वो फास्ट रिकवर हो, वही सब बिजनेसमैन को चाहिए. So payback period always lower the better, and payback period gives you a very quick, fast insights that within 3 years I'm able to recover my investment. Okay, go for the project. Okay, go for the project because you are able to recover within 3 years. ठीक है? Disadvantage. Disadvantage of payback period. One of the student rightly said that it ignores time value of money. See, in this entire technique, we didn't discount any of the future cash inflows. कहीं पे भी हमने डिस्काउंट किया क्या? देखो, we did not discount any of the cash inflows. So payback period technique ignores the time value of money का concept. Are you getting this? This is one of the biggest drawback of this technique. So you are ignoring time value of if you are ignoring time value of money ka concept, what does that mean? You know that 25 lakh that you would receive at the end of year 6 is worth 25 lakh only today. 6 साल बाद जो 25 लाख मिलने वाला था उसकी आज की वैल्यू भी 25 लाख ही है, which is very illogical. The cash inflows that you would generate at the end of year 6 for 25 lakh is worth 25 lakh today, which is very illogical. So it ignores time value of money. And second, which is also very important, that it ignores all the cash inflows that are generated. It ignores all the cash inflows that are generated after payback period. What does this mean? You know, देखो हमारा काम, our job was completed at this point. These cash inflows we never considered for our payback period. Are you getting this? So it ignored. And can you see majority of your cash inflows are generating in year 5, year 6. But payback period ignores that as well. Are you getting this? All the cash inflows that are generated after year 3 in our illustration are irrelevant. Even though major cash flows are getting generated in last 2 years. But payback period technique does not consider that. Following? So these are the biggest two drawbacks. सर कुछ हिंदी में भी बोल सकते हो, ओके ठीक है. सो पे बैक पीरियड टेक्निक, आपको पे बैक पीरियड कैसे कैलकुलेट करते हैं वो समझ में आ गया. अब उसके कुछ एडवांटेजेस यानी कि कुछ फायदे हैं, यानी कि कुछ अच्छी बातें हैं. सम सर्टन पॉइंट्स आर अंडर डिसएडवांटेजेस, यानी कि कुछ उसकी बुरी बातें हैं. फर्स्ट डिसएडवांटेज इज इट इग्नोर्स टाइम वैल्यू ऑफ मनी. टाइम वैल्यू ऑफ मनी मीन्स कि ये जो 25 लाख आपको ईयर 6 में मिलने वाले थे, इट मीन्स कि वो आज के तारीख में भी उसकी वैल्यू 25 लाख ही है. दिस इज व्हाट इट मीन्स. इफ यू आर इग्नोरिंग टाइम वैल्यू ऑफ मनी, इफ यू आर नॉट गिविंग इंपॉर्टेंस टू द कॉन्सेप्ट ऑफ टाइम वैल्यू ऑफ मनी, उसका मतलब क्या कि 6th ईयर में जो 25 लाख मिलने वाला है कंपनी को, आज के तारीख में उसकी वैल्यू 25 लाख ही है, विच इज वेरी इलॉजिकल, विच इज इम्प्रैक्टिकल. 5th ईयर में जो 20 लाख मिलने वाला है कंपनी को, उसकी वैल्यू आज के तारीख में 20 लाख ही है, विच इज वेरी इलॉजिकल ना, विच इज वेरी इम्प्रैक्टिकल. सो इट इग्नोर्स टाइम वैल्यू ऑफ मनी. सेकेंड डिसएडवांटेज यानी कि सेकेंड बुरी बात पे बैक पीरियड की क्या है कि पे बैक पीरियड के बाद जो कैश इनफ्लोज जनरेट होते हैं ना, उसका कोई वजूद नहीं है, कोई रेलेवेंस नहीं है. ठीक है, हमारा पे बैक पीरियड देखो इस इलस्ट्रेशन में ईयर 3 तक था, बट उसके बाद कंपनी ने 5 लाख अर्न किया है, 5th ईयर में 20 लाख अर्न किया है, 6th ईयर में 25 लाख अर्न किया है. बट पे बैक पीरियड गिव्स नो इंपॉर्टेंस टू दोस कैश फ्लोस. इट इज इररेलेवेंट फॉर पे बैक पीरियड. आप 1 करोड़ भी कमाओ तीसरे साल के बाद, इट हैज नो रेलेवेंस फॉर आवर कैलकुलेशंस. आर यू गेटिंग दिस? सो दिस आर टू बिग डिसएडवांटेजेस. बोलो any queries for payback period with this? Our payback period technique is completed. Huh? So first we learned the meaning, second we learned how to calculate, third we learned advantage and disadvantage. This is all about payback period technique. ठीक है. Now one of the disadvantage of payback period was time value of money. ठीक है, but this disadvantage is resolved by our next technique called as discounted payback period. This disadvantage of payback period is resolved, यानी कि इस प्रश्न को सॉल्व कर दिया कौन से टेक्निक ने? दूसरी टेक्निक, हमारी डिस्काउंटेड पेबैक पीरियड टेक्निक. सो लेट मी आस्क यू क्वेश्चन, व्हाट वुड बी द डिफरेंस बिटवीन पेबैक पीरियड एंड डिस्काउंटेड पेबैक पीरियड? सोचो क्या होगा डिफरेंस दोनों में, बोलो. What would be the difference between payback period and discounted payback period? The only difference is under payback period we ignore time value of money, That is, we didn't discount cash inflows. But under discounted payback period technique, we will consider time value of money. Yani ki we will discount the cash inflows and then find the years. Then find the years within which my original investment is getting recovered. Are you getting this? The only difference is in the concept of time value of money. Yes, we are taking the discounting rate. So again, let's move to next technique, which is discounted payback period. So the payback period had one disadvantage. That is, it ignored time value of money. And that question is now resolved by this technique called discounted payback period technique. So the only difference is under this technique, all the cash inflows will be discounted using the discounting rate. And we know how to find the discounting rate. We have just learned that half an hour ago, few time ago. Discounting rate is either your expected rate or industry rate, or in absence of any information, WACC. Okay? So under this technique, under the discounted payback period technique, we will discount all the cash inflows. So again, let's continue with our above example only, with this illustration only, and let's find the discounted payback period. So again, my original investment was 10 lakh. My stream of cash inflows are as follows: 250, 3 lakh, 480, 5 lakh, 20 lakh, 25 lakh. Okay? And my, let's continue with the above illustration, and my WACC is, let's say, 15%. So my discounting rate here becomes 15%. So let's solve. Again, the format will remain same. Column 1, you will write for years. Okay? Column 2, you will write for cash inflows. Okay? इतना था 250, 3 lakh, 480, 5 lakh. I guess 5 lakh ही था. 20, 25. And now, before preparing cumulative cash flow ka table, you will find the discounted cash inflows. You will first calculate the discounted cash inflows. Yeah, are you getting this? So discounted cash inflow for year 1 would be 2,50,000 divided by 1.15 raised to 1. Yes or no? For year 2, it would be 3 lakh divided by 1.15 raised to 2. For year 3, it would be 4 lakh 80 divided by 1.15 raised to 3. 5 lakh divided by 1.15 raised to 4. 20 lakh divided by 1.15 raised to 5. 25 lakh divided by 1.15 raised to 6. This is how you find discounted cash inflows. Yes or no? बोलो कितना आ रहा है फॉर ईयर 1? ये अभी फिलहाल हटा देते. Please use the calci now. I have taught you how to solve this on calci. बोलो कितना आ रहा है? for year 1, year 2, year 3, year 4, year 5. Yes, we are taking the discounting rate. 217391. 217391 for year 1. I'm believing on your calculation. I don't have calci. 22. This is for year 2, Almas. 226843. Okay. 226843. Then for year 3, 480 divided by 1.15. Press equal to 3 times. Huh? 315608. Okay. 315608. For year 4, it would be 5 lakh divided by 1.15. 4 times equal to 285,877. 285,877. For year 5, 994,353. And for year 6, 1080,819. So once you are ready with discounted cash inflow, now prepare that cumulation cash inflow ka table. So now you prepare cumulative discounted cash inflow ka table. This is the only difference between payback period and discounted payback period. ठीक है? Year 1, 2, 3, 4, 5, 6. So year 1 it is 217,391. Year 2 it would be 217,391 plus 226,843. बोलो कितना आ रहा है? I have to use my mobile phone for solving. 217,391 plus 226,843. 444,234. For year 3, it would be 444,234 plus 315,608 plus 315,608. 759,842. 759,842 plus 285,877. 1045,719. 1045,719 plus 994,353 plus 994,353. 2040,072. 2040,072 plus 1080,819. 1080,819. 3120,891. ठीक है? Yes, correct. 3120,391. So again, we have to follow the same process. Bolo, tell me. Ki my original investment is 10 lakhs. That will remain constant. Huh? So can I say now it is getting recovered somewhere between year 3 and 4? Yes or no? My 10 lakhs of original investment is getting recovered somewhere between year 3 and 4 now? Yes or no? So my discounted payback period is 3 plus something. That is for sure. Because it is getting recovered between year 3 and year 4. Again, interpolation in the entire 1 year period. In the entire 1 year, my company is able to recover how much between year 3 and year 4? Can I say 285,877? Yes or no? My company is able to earn or recover 285,877 in the entire 1 year period. That is between year 3 and 4. Huh? My company has earned, or I would say recovered, 285,877. But I just want to recover the difference between these two. 10 lakh minus 759,842. 10 lakh 10 lakh minus 759,842. Can I say 240,158? I just want to recover 241,158 because if I am able to recover 241,158, my job is done. Yes or no? So how much year it will require? Again, cross multiplication. 240,158 divided by 285,877. 0.84 years. 0.84. So can I say my discounted payback period comes to 3.84 years? Yes or no? Are you following? Yes, 3.84. Correct. Understood? Now my question to you. Will my payback period be higher than discounted payback period और वाइस वर्सा? क्या होगा? डिस्काउंटेड पेबैक पीरियड ज्यादा होगा पेबैक पीरियड से कि पेबैक पीरियड डिस्काउंटेड पेबैक पीरियड से ज्यादा होगा? बोलो. Which one would be higher? Always. Discounted, yes, obviously discounted because you are discounting the cash inflows. That means you are bringing down, you are reducing down the cash inflows. So if your cash inflows comes down, the present value of cash inflows comes down. Can I say more time it will take to recover? Lesser the cash inflow each year, more the time it will take to recover. So discounted payback period will always be higher than your payback period. Huh? Because under discounted payback period, you are bringing down, you are falling down your cash inflows. So if cash inflows falls down, your recovery period will be higher. उतना टाइम ज्यादा लगेगा. Following? बोलो, any queries, any concerns with these two technique? Yeah. So discounted payback period will always be higher than payback period. So with this बातों में हमने दो टेक्निक सीख ली. One is payback period, one is discounted payback period. And दोनों में difference is only about time value of money. Break? No break. This is just a session of 2.5 hours. You don't get any break over here. Let's move to. But again, discounted payback period also has its disadvantage. The disadvantage is that after your discounted payback period timeline, that is after this timeline, all the cash inflows are ignored. Okay? So here in this case, till fourth year, your cash inflows rather than your discounted cash inflows were relevant. But after that, year 5 and 6 is totally irrelevant for our calculations. Even though major cash inflows are generated in those years, then also they are irrelevant. Okay? So this is also a disadvantage of discounted discounted payback period. So let's move to third technique. लाल कलर नहीं आ रहा है. Okay. Third technique is called as accounting rate of return. or the another name of this technique is also called as average rate of return. Either you say accounting rate of return or either you say average rate of return. It means one and the same. Okay? Here, this is the only technique of capital budgeting that gives importance or that gives high significance to accounts and not finance. मतलब जब जब accounts की बातें आएगी ना, significance would always be on net profit rather than cash inflows. Are you getting this? This is the only technique of capital budgeting that gives significance to accounting profit rather than cash flows. So when account word is coming in FN, you have to give importance to profit. So the formula of accounting rate of return or average rate of return is NPAT divided by original investment. This is the simple formula. Let's say you have invested 10 lakh in the business and your NPAT, average NPAT, yeah? Average NPAT or your average profit comes to 5 lakh. So let's say original investment is 10 lakh and average profit, not cash flows. Please mind the terms. Give weightage to the terms. We are more concerned with accounts or accounting earnings as far as this technique is concerned. So you have to ignore cash inflows. You have to focus on the word profit. And let's say my average profit comes to 3 lakh. Means my average profit per year comes to 3 lakh. So my average accounting rate of return or ARR would be 3 lakh divided by 10 lakh into 100, which comes to 30%. So my project has earned 30% of average return, but from accounting perspective. This is how you interpret this. Are you following? My original investment was 10 lakh in the business and my average net profit across the years was 3 lakh. I want average profit of 3 lakh per year. So my accounting rate of return from the project is 30%. Are you following this? Are you getting this? Let's take another illustration. Original investment is equal to rupees 15 lakhs. And my stream of NPAT year wise is as follows. Year 1, year 2, year 3, and year 4. The life of the project for the time being, let's assume to be 4 years. Year 1 ka average, net profit is 350. Year 2 ka, let's say 475. Year 3 ka 225. Sorry, 325. Year 4 ka 590. Tell me, what is my total NPAT? Total NPAT is summation of all this. 3 plus 4, 7 plus 3, 10, 11, 16, 90, 17 lakh 40. Correct? So my average NPAT would be how much? 17 lakh 40 is my total net profit for all the years. So average would be 1740 divided by 4. So on an average, my project has earned net profit after tax of rupees 4,35,000 per year. Okay? So my ARR would be ARR is equal to 435 divided by original investment of 15 lakhs. Since it is rate of return, we have to find a rate. So you multiply it by 100. You calculate it in percentage. 29%. Okay? Are you following? So accounting rate of return is the only technique where significance is given to NPAT rather than cash inflows. Okay? Because you are giving relevance to the word accounting from accounting perspective and not from FM perspective. Understood? Sometimes formula of ARR is also average NPAT upon average investment. Upon average investment into 100. Sometimes you take investment का average. ठीक है? But any formula you can use while solving or while calculating in your examination. You will given marks for any of the formulas. Either you use original investment in the denominator or either you use average investment in the denominator. Both are correct. Are you following? So this is all about accounting rate of return. Technique number 3, ARR. And as the name suggests, you have to give relevance to accounting perspective. So here in the numerator, it is not average of cash inflows. It is average of net profit after tax. Are you following? Any doubts? Any concerns? Everything is very logical in FM. कोई doubt है बोलो. Any queries? Any concerns? Can I move to? Okay. Can I move to next technique? That is NPV technique. Net present value technique, which is NPV technique. NPV technique is highly used technique as far as practical world is concerned. I was a financial executive in one of the blue chip companies in my starting career ka years. So in that, my role was just evaluating different projects and to decide whether the company should invest in that projects or not. So I always used to first calculate or first evaluate the viability using NPV technique. मेरा काम यही रहता था. पहले मैं NPV कैलकुलेट करता था. Then I used to calculate using other techniques, but my prime concern was about NPV. So this is practically accepted, widely used technique. ठीक है? The formula is very simple. We have already learned in our introductory part of this chapter. NPV is calculating or it is comparison of cash inflows with cash outflows, but not in absolute terms. We have to compare it in relative terms. And what do you mean by relative comparison? It is nothing but comparing the present value of cash inflows with present value of cash outflows. ठीक है? And the resultant figure is called as net present value or the net benefit. ठीक है? Are you following? How to calculate cash inflows, that we learned the entire format. How to calculate present value of those cash inflows, we have learned the concept of time value of money. So it is very simple to calculate inflows and outflows in present value terms. Okay? The decision making rule of NPV is very simple. If NPV of the project is positive, you accept the project. And if NPV of the project is negative, you reject the project. Very simple decision making rule. If NPV is positive, you accept. And if NPV is negative, you reject the project. Okay? But, let's say, now my question to you. Let's say there are multiple projects with positive NPV. There are multiple projects that company has evaluated which has positive NPV. So NPV technique will just say that you have to accept those projects. Now it is on you to decide which project to accept. Are you following? So as far as NPV technique is concerned, it will just say yes or no. Are you getting this? So if there are multiple projects with positive NPV, then NPV will say accept all the project because it is because the NPV is positive. Are you following? Are you getting this? So NPV का decision making rule is simple. If positive, then accept, irrespective of the number of projects. If negative, then reject. Bolo, doubts? Any concerns? Till here. And as I said, NPV technique is highly important because it has much more practical significance than compared to other techniques. Can I move ahead? So NPV technique is very simple. You calculate the cash inflows, you find the present value of those cash inflows, then you compare it with present value of cash outflow, check whether the net present value is positive or not. If it is positive, go for the project. If it is negative, reject the project. Okay? Let's move ahead. Now, there are certain special considerations that a company needs to think of while calculating cash inflows. There are certain special considerations, or there are, I would say, certain special line items while calculating cash inflows. Number one is about sunk cost. Have you heard of this term sunk cost before or in your cost management paper? What do you mean by sunk cost? Tell me. Sunk means डूब गया. Whether you take the project or not, this cost has already been incurred. वो डूब गया है, वो आपके पैसे गए. That is sunk cost. Are you following? Sunk means डूबना. पैसे डूब गए means पैसे चले गए. Now whether you take that project or not, this cost has already been incurred. Following? That is sunk cost. Now let me give you an example. Ideally, what every company does, if they want to evaluate the viability of the project, they outsource the entire task to a professional. They hire a professional and tell them to prepare a project report. Project report is nothing but a study of the viability of the project. Means कंपनी का फ्यूचर में रेवेन्यू कितना होगा, कॉस्ट कितना होगा, डिस्काउंटिंग रेट क्या होगी, कंपनी को प्रोजेक्ट लेना चाहिए कि नहीं. इट इज ऑल अबाउट दैट. द रिपोर्ट वेदर टू एक्सेप्ट द प्रोजेक्ट और नॉट इज प्रोजेक्ट रिपोर्ट. सो दे आउटसोर्स दिस टास्क टू अ प्रोफेशनल. ठीक है. सो लेट्स से एक्स लिमिटेड hired me as a professional to prepare a project report for their new upcoming project. Okay. Obviously, I will not do this task free of cost. Yes or no? I will charge fees. So again, let's say I charge the fees of rupees 2,50,000 for preparing a single project report. Okay. So now, can I say this professional fees has been a sunk cost for the project? Why? Now, whether the company takes the project or not, they have to pay me these fees because I have prepared a project report for them. A company cannot say, na, since we are not taking the project, I will not pay you the fees. They cannot say this. They have to pay me 250 any which ways, whether the company takes the project or not. Yes or no? Are you following? So this professional fees is an example of sunk cost for that specific project. Are you getting this? Any doubts? So sunk cost, whether you take the project or not, it is always irrelevant. Because ये cost तो आपका incur होगा ही होगा. Whether you take the project, well and good. If you are not taking the project, then also you have to bear this cost. So this is irrelevant for the project. You have to ignore this in the cash inflow. Irrelevant, and ignore this while calculating the cash inflows. Are you following? Did you understand? Did you visualize the example? Bolo, did you visualize this example? Any doubts as far as sunk cost is concerned? And in practical scenario as well, many professionals charge more than 2,50,000 for preparing a single project report. So this is a very lucrative field. After becoming a CA, you can focus on this field. It is very lucrative. So sunk cost is irrelevant for our calculation of cash inflows. It means हम यहाँ पे जो कॉस्ट माइनस करते थे ना, आ गया, वेयर इज द फॉर्मेट, हाँ here this sunk cost will hold no place over here. Sunk cost will never get subtracted because it is irrelevant for the project. Are you getting this? So it does not hold any place in this format of cash inflow. So this is all about sunk cost. Second was tax savings on depreciation. That I already explained you about in that format, that why we subtract depreciation first and then why we added back the depreciation. So second point is all about tax savings on depreciation that we already covered earlier. Third is about working capital. Third is all about working capital. Okay. Tell me, explain me the meaning of working capital in layman terms. Huh? Simple. ऐसा मत बोलना sir, it is current assets less current liabilities. Layman does not understand what is current asset and current liabilities. So explain me in the way that layman understands. Bolo, what do you mean by working capital? Daily expense to meet. Okay. Partially correct. Any other try? Working capital is the asset which can be liquidized quickly. Okay. Correct. But in a very simple meaning, working capital is the funds, the money that you need for running day-to-day business. Money you need for day-to-day business. Okay? Let's say I want to start a new manufacturing business. It is my favorite industry, manufacturing. So now visualize. I have bought a land. Okay? I have constructed a factory building on this land. So this is factory building on this land. I've installed machineries for production on this land, on this factory building. I've done all the electrical fittings. I've constructed an office space as well. So in other terms, can I say I've invested in fixed assets? Land ले ली, फैक्ट्री बिल्डिंग बना दी, मशीनरीज इंस्टॉल कर दी, ऑफिस स्ट्रक्चर बना दिया. कैन आई से माय इन्वेस्टमेंट इन फिक्स्ड एसेट इज डन? बट जस्ट बाय इन्वेस्टिंग इन दिस फिक्स्ड एसेट विल माय मैन्युफैक्चरिंग बिजनेस स्टार्ट? बस सिर्फ ये मशीन लगा देने से माय मैन्युफैक्चरिंग बिजनेस स्टार्ट हो जाएगा क्या? टेल मी. कैन आई से आई वुड नीड रॉ मटेरियल्स टू एंटर मशीन में डालने के लिए. Yes or no? Raw material लगेगा. Then I would need some amount of labor who would work on these raw materials to convert it into finished goods. So when I say that is the additional amount that you need for running day-to-day business, and that is your working capital. Are you following? So just by investing in fixed asset, your business will not start. You need additional capital for running those fixed assets, and that is working capital. Are you following? Money that you need for day to day business operations. सिर्फ मशीन लगा देने से, फैक्ट्री की जगह लेने से मैन्युफैक्चरिंग का बिजनेस स्टार्ट नहीं होगा. यू वुड नीड एडिशनल फंड्स फॉर रॉ मटेरियल, फॉर लेबर, फॉर ओवरहेड्स. दैट इज वर्किंग कैपिटल. सो कैन आई से टू स्टार्ट एनी प्रोजेक्ट, ओरिजिनल इन्वेस्टमेंट के साथ, ओरिजिनल इन्वेस्टमेंट इज ऑल अबाउट ideally fixed asset ka investment. Original investment, till now whatever I explained you about original investment was more or less related to investment in fixed assets. ठीक है? So apart from original investment, can I say business में this original investment is nothing but investment in fixed asset. Apart from that, can I say I would need working capital ka investment as well? Yes or no? Are you getting this? So this working capital investment becomes an outflow. Are you following? Are you getting this? Any questions? So apart from original investment, there is one more outflow in the form of working capital investment. Are you following this? So this is an outflow. Correct? Now, at the end of the project's life, this is very important. Huh? At the end of project's life, there will be my release of working capital. Let's say my manufacturing business was for 5 years. So at the end of 5 years, the working capital that I had invested in my business will get released back to me. So this will be my inflow at the end of life. Working capital investment would be an outflow in the year 1. Working capital investment would be an outflow at start. But that same working capital would get released back to you once your project life ends. Sir, कैसे? Working capital release कैसे होगा? A working capital, can I say it is nothing but investment in current assets and current liabilities. So can I say at the end of life, there would be some amount of debtors, there would be some amount of stock, there would be some amount of cash and bank balance from the project. Yes or no? And there would be some amount of payables. Are you getting this? So at the end of the project, can I say your debtors will pay you back? All the debtors will pay you. All the stock would get sold out, and cash and bank balance is already in the liquid form. So this working capital at the end of life will get released back to you. So it is an inflow at the end of life. But at the start of the project, it is an outflow for you because you have to make an investment. But at the end of life, that investment will be released back to you. So it is an inflow. Are you following? Yes, you can deduct from the cash inflow or you can add with cash outflow. It is one and the same thing. Either you deduct it from cash inflow at the start or either you add with cash outflow. It is one and the same thing. ठीक है? But ये समझा कि why it is release or why it is inflow at the end of life? Because ideally working capital is what? It is an amount that has been invested in your current assets and current liabilities. So at the end of life, these debtors will pay you everything unless they don't run away. This stock will get sold out unless it is obsolete. Are you getting this? Cash is already in liquid form. So you already have that cash and bank balance with you. And payables, you will pay back to the creditors at the end of project life unless you run away. So that's why release of working capital is an inflow at the end of life. So the crux is this much only. But if there is any specific line item in the question about working capital, then it is an outflow at the start and inflow at the end of life. Are you getting this? Outflow at the start and inflow at the end of life. Because that working capital, it is a temporary capital invested. So there will be a release of working capital at the end of life. So can I say, start में तो कोई discount करने की जरूरत नहीं है. But at the end of life, you have to add this with your other inflows and discount this as well. Because NPV technique is concerned with present value. So this release of working capital will also be discounted. Huh? Please take a note of it. Release of working capital has to be discounted just like other inflows. Following? Understood? So first special point, special line item was all about sunk cost. Sunk cost has no place in capital budgeting. Second point was depreciation. Again, depreciation by itself has no place in capital budgeting, but tax savings on depreciation has significance. So that's why we subtract depreciation first and then we add back. Third is working capital. Working capital investment. Start में पैसा गया इसलिए outflow हो गया, but at the end of life you will get back that investment. So that is release of working capital, inflow, correct? And you have to discount it with other cash inflows. ठीक है? Third point, sorry, fourth, important. Allocated overheads. Allocated overheads. ठीक है? See, capital budgeting is project specific. Huh? And all the calculations are project specific. Now, what do you mean by allocated overheads? Tell me, you would have heard this term as well in your cost management paper. What do you mean by allocated overheads? Or in other words, common cost, common overheads? Tell me. What do you mean by common cost or allocated overheads? Hey, have you heard of this term before? Each department. Oh, correct. Rihanna is correct. Okay. So let's say there is a common cost. Let's say general cost of rupees 5 lakh. Let's say audit fees. This is audit fees of rupees 5 lakh charged by CA, and he has done audit for each project, for all the projects. So company, this A limited company has different projects currently under considerations. Let's take this 6 lakh. Okay? 6 lakh. There is project A. Company is running project A. Company is running project B. Company is running project C. Company is running project D. And likewise, project E. So auditor has done audit for all the project. He has charged a fees of 6 lakh. He has charged a fixed fees of 6 lakh. So can I say, unless otherwise specified, all the project will get a cost of how much? करो कितना आएगा? All the project will be allocated audit fees of 6 lakh divided by 5. Yes or no? 1,25,000. सॉरी 1,20,000. यहाँ तक कोई डाउट? एनी क्वेरी स्टिल हियर? So unless otherwise specified, this common cost will be allocated in equal proportion as far as financial management is concerned. Na? So audit fees of 6 lakh, auditor has done audit for all the projects. So project A ka allocated cost would be 120, for B 120, likewise for C, D and E. Now, let's say company is undertaking a new project, project F. ठीक है? Project F. So can I say this is a capital budgeting decision whether to invest in the project or not? Company has invested, company has taken that decision, company has started a new project, project F. Now, the auditor will audit project F as well now, apart from A, B, C, D, E. Yes or no? Because he is the auditor of entire company and not for specific project. And let's say he does not charge any extra fees. He just charges again rupees 6 lakh overall. Are you getting this? Again, he is not charging any extra fees. So can I say this now the apportionment would be 1 lakh, 1 lakh, 1 lakh? Yes or no? Now the apportionment would be 1 lakh, 1 lakh, 1 lakh. So this allocated overheads are irrelevant for project F. सर हाउ इररेलेवेंट? 1 लाख तो उसको अपोर्शन हुआ, बट थिंक लॉजिकली, ये प्रोजेक्ट एफ आने से इसकी कोई फीस बढ़ी नहीं है. इफ प्रोजेक्ट एफ वाज नॉट देयर, एनी विच वेज फीस वुड बी 6 लाख ओनली. आर यू गेटिंग दिस? सो इन दैट सेंस इट इज इररेलेवेंट फॉर द प्रोजेक्ट. आर यू फॉलोइंग? दिस इज वेरी इंपॉर्टेंट. दिस इज वेरी important and little hard to digest. This, because of project F, fees has not increased, means company का खर्चा बढ़ा नहीं है. So it is irrelevant for project F. हाँ, if this fees would have increased because of project F, then that cost would have been relevant for that project. Are you getting this? Let's say प्रोजेक्ट एफ के आने के वजह से ऑडिटर की फीस 50,000 बढ़ गई, तो दिस 50,000 इज रेलेवेंट फॉर प्रोजेक्ट एफ. आर यू गेटिंग दिस? सो व्हाइल कैलकुलेटिंग एनपीवी ऑफ प्रोजेक्ट एफ, 50,000 विल बी कंसिडर्ड. बट इफ नो फीस आर इंक्रीज्ड बिकॉज ऑफ प्रोजेक्ट एफ, then you have to ignore the allocated overheads, you have to ignore the common cost, because वो 6 लाख अब प्रोजेक्ट एफ में नहीं, ए बी सी डी ई में एलोकेट होता. फीस तो उतनी है. आर यू फॉलोइंग? फीस हैज नॉट इंक्रीज बिकॉज ऑफ प्रेजेंस ऑफ प्रोजेक्ट एफ. It would have remained the same only. So common cost ideally has to be ignored if we are calculating NPV for new project. Are you following? If the question says calculate NPV for project F, and if the question specifies that common cost has not increased because of the presence of project F, then you simply ignore. Because वो नहीं होता तो भी ये allocate तो होने वाला था दूसरे प्रोजेक्ट में. Are you following this? Are you getting this? हाँ, if your common cost has increased because of new project, then that part is relevant for the project. And that increase is totally relevant for the new project. But if common cost has not increased only, then it is irrelevant na, whether I take the new project or not. Are you following? So here the special considerations was all about relevance and irrelevance of certain line items. So some cost totally irrelevant for the project. Depreciation totally irrelevant for the project, but tax savings on depreciation is relevant. Then working capital, investment and release relevant for the project. Common cost, if not increased, then totally irrelevant. Common cost, if increased due to presence of new project, then it is relevant. Did you understand this? So these are special considerations for certain special line items. Then you need to take care of. बोलो कोई query, कोई concern, कोई doubt. So for allocated overheads, the core content is very simple. If allocated overheads or your common cost increases because of taking new project, then it is relevant. It is relevant for new project. Then it is relevant for new project. But if allocated overheads or common cost does not increase, it remains the same. If it remains the same, then it is irrelevant for new project. Why? Because cost is not getting increased, only the apportionment amount, only the ratio is getting changed. बाकी cost नहीं बढ़ रहा है. So it is irrelevant. ठीक है? So this is very important. The core content is this. So these were certain special considerations about special line items while calculating cash flows. Any doubt, any queries? These LVCs, these regular LVCs will be more about conceptual learning. Then you will have revision LVCs, where more practical problems would be solved. Done. So in today's session, let me briefly recap you what we learned. First, we learned the objective of this chapter. The objective is very simple. It is to decide whether to invest in the project or not. Project, the term project has a very broad meaning. Okay? Then we learned how to decide whether to invest in the project or not. So I gave you an illustration wherein we learned that inflows and outflows need to be compared, but not in absolute terms. Rather, we need to compare in relative terms or in real terms. Okay? In real terms or in relative terms. What do you mean by real terms or relative terms? It means comparing the present value of inflow with present value of outflow. ठीक है? ये सीखा. Then how to calculate cash inflow. All the question will not directly give you the amount of cash inflows. Then we learned the format, how to calculate cash inflows. It starts with sales and with cash inflows. Then all the question will not give you the discounting rate. Sometimes they will ask you to calculate discounting rate. So discounting rate is nothing but it is either your expected rate of return from the project. If not that, then industry standard rate of that industry. Third, WACC. ठीक है? In 90% of the question, WACC दिया होगा. Then we started with capital budgeting techniques. First is payback period. Payback period is the time taken to recover original investment. And how, if cash inflows per annum are constant, you use the formula of payback period. If cash inflows per annum are not constant, you calculate using interpolation. Okay? Then there are certain advantages and disadvantages of payback period. One of the disadvantage was it ignores time value of money. So to resolve this disadvantage, we had another technique called discounted payback period. The only difference between payback period and discounted payback period is discounted payback period considers time value of money. Third, we learned how to calculate ARR. It is nothing but here you have to give significance to accounting perspective. So accounting perspective is more concerned with net profit rather than cash inflows. So the formula is average NPAT divided by original investment, or average NPAT divided by average investment. Both is correct. Answer would be different in both the scenarios, because here in one scenario you are taking the original investment amount, and in another formula you are taking the average. So answer would get different, but both is correct. Okay. Then we learned NPV. The formula of NPV is present value of inflows minus present value of outflows. Yes or no? And then last but not the least, we learned about special consideration about special line items while calculating the cash flows. Okay. And present value of cash inflows, it is always denoted by PVCI. The short terminology is PVCI. And cash outflow present value is denoted by PVCO. So please, students, get familiar with this short terminology. Now on, we will just use PVCI and we will just write PVCO. तो आपको समझ जाना चाहिए what does that mean. ठीक है? With this, we end today's session I have to because one other sir also wants to take for 5 minutes. Vivek ji wants to take 5 minutes of this session. So, hey Vivek ji.
Yes, Dhvip sir, thank you so much.
Yes. Thank you.
Thank you for such an interesting session. And hello, students. And Dhvip sir has very well started the chapter of capital budgeting, explaining all the concepts very beautifully, and some of the pertinent points which actually struck with me also. And I am listening as a layman. So he has started with the point of explaining why depreciation is first of all deducted and then it is added back. And he has very rightly invited the comments from the students and then gave the explanation in a very, you can say, easy manner. So depreciation is first of all deducted because of tax savings, right? And later it has been added because it is a non-cash expense. And then he has also further moved on with the discount rate that in the absence of any information, we use the WACC, that is weighted average cost of capital. Another aspect which he has pointed out is the interest cost. Why interest cost is not deducted while this calculating the cash inflows. Very rightly summed up by Dhvip sir that cost of debt is actually considered. The interest aspect is already considered in the WACC while calculating the cost of debt. Therefore, it is not considered in the calculation of cash inflows. And he has also very nicely elaborated the other concepts also with lots of examples. Student, some more important points which I want to mention is that while preparing for the examination, please go through the study material very thoroughly. Understanding every concept. If you are not able to understand any concept, please write to us, discuss with us. And also the mock test papers as well as the revision test papers, MTPs and RTPs. Because the MTPs will enable you to attempt the question in a real examination. It will give you a feel of as if you are appearing in the examination. And RTP, there are multiple questions, so RTP will also equip you to the examination. So these three things, that is the study material, the MTPs and RTPs, and also the classes, you can see the recordings are available to you. You can see any number of times. If you are stuck in anything, you can go through the concept again and again, and you can always write to us also. The email at which you write to us is fm-inter@icai.in. I will repeat, fm-inter@icai.in. And another aspect which I was actually mentioning is that the you should not ignore the theoretical questions also, because if anyhow you're stuck in any of the practical questions somehow, then theory will all save you in that situation. So I will recommend you to please do not ignore the theoretical questions and try to understand their concepts also. So by this note, I will be ending this session. Thank you again, Deep sir, for such a nice session. And thank you, students, for your patient listening. Good
Thank
night.
you.
Thanks again.
Thank you, Vivek sir. Thank you.
Thank you, sir. Thank you.
Have a nice weekend, students. Thank you. हाँ जी